Hey, what's up, stock compounders? Brad here. So it is that time of the year again where I pick 5 Magic Formula stocks. This is going to be my 4th round of buying Magic Formula stocks. So after today, I'll have 20 Magic Formula stocks in my portfolio, and it will be effectively a full year of buying Magic Formula stocks. Okay, I'll have a year's worth of stocks in my portfolio. So I don't do the straight up magic formula strategy as recommended by Joel Greenblatt in his book, The Little Book That Meets the Market. I actually apply some filters to these magic formula stocks that show up on the screener to decide which ones that I want to buy. So that's one difference from, how kind of by the book magic formula is used. The other difference is I'm not just holding them for a year, okay? That's a big part of the magic formula. You kind of sell after a year, or if it's still on the screener, you would hold on to it for another year. But I'm not doing that, okay? I'm holding these for at least 2 years. And I haven't decided yet exactly how I'm going to go about deciding if I want to sell, but I have time, okay? This is, like I said, my 4th round of buying. I'm 9 months into this process here. So anyway, let's go through the picks, right? What you guys came to see, the 5 picks today for my Magic Formula portfolio. So of course, this is where I started, magicformulainvesting.com. I screened with a minimum of 50 million, got 50 results. And essentially, I just copied these tickers, okay, into a spreadsheet. I just want to see the tickers. Now, I also screened at 250 million, okay? Now, that's going to give me about 7 more companies that don't show up on the original 50 million minimum screener. And that's because 50 is a little bit too small, in my experience, to come up with 5 stocks that I'm comfortable with. But if I'm getting upper 50s, closer to 60, I can usually get 5 that kind of fit into all of my filters pretty nicely. So let's come to my spreadsheet here. So you can see here, there are 57 tickers here. Now, the first 2 things I did to filter these is I want to know how many gurus own each one, okay? And I'm using Dataroma for that. So, for example, we can search Dish, okay? That's the ticker here. So I search Dish in Dataroma, and right here I can see 2 super investors own this company. And if I scroll down, I can see Dodge and Cox and Daniel Loeb. They both own Dish Network Corp, okay? So that's simply the 2 here. How many super investors that are tracked by Dataroma own this company? The second thing I'm looking for is there a write-up in Value Investors Club? Is there an investor who's taken the time, written a thesis for this company, a bullish thesis? That to me, and I first got this from Monish Pabrai. In his book, The Dondo Investor, he actually said, if I was going to use the magic formula, I'd probably combine it with something like, there being a write-up in Value Investors Club to improve my results. So I cloned that from Monish Pabrai. So you can see here, in Value Investors Club, there is a write-up from November of 2020, only 5 months ago, okay? So I include that date of the most recent write-up for Value Investors Club. Now, in order to make it to the next filter, the company has to satisfy one of these 2 criteria. It has to be owned by at least 1 guru, as tracked in Dataroma, or it has to have a write-up in Value Investors Club within the last 2 years, okay? I think I've actually even tightened that up from previous rounds of Magic Formula buying. It's got to be within 2 years. So you can see here all of these that I've looked up insider ownership numbers for. That's 37 companies. Either are owned by a guru or have a write-up within the last 2 years. So that's how you get to the next stage. Now, the third filter Or, these two are kind of the first filter. So the second filter is, how high is the insider ownership? Okay, because if I'm going to be buying a company, if I'm going to be putting my money on stock for a company, I want management to be incentivized similarly as I am. I want them to have skin in the game. I want them to be an owner of that business. Charlie Munger says, what does he say? If you understand what the outcome is going to be, understand how the person is incentivized. In this case, we want to know how they're financially incentivized. Are they just collecting paychecks, or do they actually have an ownership stake in the business? So the second filter, I sorted by insider ownership. And this isn't always a very easy number to figure out. The place that I go to get this the fastest and the most reliably is the SEC website. Okay, so let's just go through an example. Dish Network Corp. I'm gonna show you where I find this info. So we're gonna go to proxy. Okay, this proxy section here. We're gonna go to Def 14A. Okay, other definitive proxy statements, the most recent Def 14A. We're going to scroll down and look at the table of contents. This one doesn't really have a table of contents, so we're going to scroll down here. We want security ownership of certain beneficial owners and management. Okay, and if we look here, we're going to find a row that says all directors and executive officers as a group. Okay, there's 15 people that are included in that. And you can see here, we want the percentage of stock owned by all directors and executive officers. Okay, those are the insider owners. So in this case, it's 54.5%. So, I rounded to the nearest percentage here. That's the highest one on the list, 55%. So I really like that. Once I've sorted by insider ownership, so we've got at least one guru or a Value Investors Club write-up. We've got a high insider ownership percentage, and I really want something above 10%. Okay, that's kind of my bar for insider ownership. The next thing I want to look at, and these are really all kind of in the same. I looked all of these up at the same time after I got kind of my most compelling after the first two filters. So I want to know market capitalization. How large is the equity piece of the business? Operating income. This is the last 12 months of income earnings from operations. Net debt. Okay, so this is the total debt minus the cash on the balance sheet. That gives us the net debt, which is basically, my total debt. If I used all of my cash today to pay off the debt, how much debt would I be left with? And this is a metric I picked up from Phil Town. I think it was in one of his first two books. It was either Rule 1 Investing or Payback Time. I don't remember. Phil Town really likes to see something below 3 for this. Debt over operating income. That essentially means, if you took 3 years of operating earnings, you could pay off all of your debt. Because, Monish Pabrai, one of the things he did, I think it was after the global financial crisis, he, got a team of interns together to study what were the most likely causes for great investors to lose money. Okay? Kind of looking at the situations where they invested in a company, they lost money. Could it have been identified beforehand that there was a risk there? And the biggest risk that came up was too much debt. Okay, so that's a filter I want to apply to these companies because I plan on holding them for 2, 3, ideally many years. So I want them to have a healthy debt level, which I'm defining as less than 3 debt to operating income. So you can see here, a couple of these have over 4, okay? Dish, Weight Watchers, ASO. So I don't like that. That's a little too high for my taste. Now, some of them have this plus sign. What is the plus sign? Plus sign means there is no net debt, okay? There's net cash. There's more cash on the balance sheet than there is debt. I really like that, okay? That makes me very happy. That's very low risk, at least in terms of, leverage, which is great. The next one is acquirer's multiple. So this is a number, it's a concept that I first picked up from the book, The Acquirer's Multiple by Tobias Carlyle. What acquirer's multiple is, it's the enterprise value, which is effectively what it would cost to buy the whole business. It's equity, not just equity, but also debt and minority ownership. It factors in cash, all that stuff. So it's enterprise value divided by the last 12 months of earnings, okay? EBIT, earnings before income and taxes. So this is a useful number. I will note this number is also used in the magic formula, okay? Acquirer's multiple is the inverse of earnings yield, which is one of the 2 metrics that are used in the magic formula to get these companies in the screener. So that's acquirer's multiple. I don't pay too much attention to that because, like I said, it's already kind of built into the magic formula. But, I'm curious where these numbers fall. The last one, 10-year return on invested capital. Now, this is the median return on invested capital, looking back over the last 10 years. Because the magic formula really only considers the last year of financials in calculating the return on invested capital. That's the other metric that's used in the magic formula, in addition to earnings yield. So I wanted a little bit longer of a chunk of time to look at ROIC, because it's possible the last year is an outlier. And that's why some of these are turning up in the magic formula, because it's got a really high ROIC for the last year. So this just gives me a little bit more data on potentially how good the business is, which is the metric that Greenblatt selected to determine or to inform, how strong of a moat a company has, how great the business is. So that's all the numbers, guys. Real quick, so let's just look at Dish here. So this is the site I use to look at 10-year ROIC, Quick FS. So you can see here, ROIC, 10-year median returns, 8.7%. So this is the site I'm using to get the 10-year return on invested capital. So let's take a look at what we've got here. The first one, again, a little more debt than I'm comfortable with at 4.1 between the debt and the operating income. So I wasn't keen to select that one right away, but let's look at what else we've got. Now, where I've highlighted red, the ticker, that means I already own it, okay? These are companies that I've bought previously for my magic formula portfolio. So I'm not going to double up on companies. I want 20 unique companies each year. So TNET, NAF, and MSGN, not going to do. Already own them in my portfolio. ABC, Amerisource Bergen, okay? That I don't own. Very impressive insider ownership. It's got net cash, which I really like. Pretty compelling acquirer's multiple. Very solid 10-year median return on invested capital. And one guru owns it. It didn't get a point for Value Investors Club because it's just too long ago. The write-up is too long ago. But if you want to dive deeper into the company, I'm sure there's valuable info in that write-up from October 2016. So that was my first one, first buy, ABC. The next one I already own from a previous Magic Formula round. IDT is the second one to pass the tests here. We've got one guru that owns it. No VIC write-up. 17%, pretty strong for insider ownership, although it is a very small company. Okay, 567 million market cap, which is great. I like to see that because potentially the smaller the company is, the bigger, the runway, the longer the runway, the longer it can compound money, assuming, it's got a total addressable market that's a reasonable size. I mean, if you have a $500 million company, but it's in a very small niche, just because it's small doesn't mean it has a lot of room to run. So, you've got to understand what industry is this company operating in and how big can it actually get. So it's a general rule of thumb that the smaller the company is, the bigger the potential runway for it. But, obviously, you need to drill into the details there. We've got net cash for this one, IDT, which is fantastic. 10-year median ROIC, not good, minus 52%. But, this isn't a hard metric at this point. It's just something I'm taking a look at each round. It's possible I'll incorporate it more heavily into the filters in future rounds. But, IDT is good enough for me for this round based on my prioritized filters. CHRS, company I already own from a previous round. Weight Watchers International, too high with the debt. Okay, it would take 5.2 years to pay off the debt from the operating income. That's too high for me. So we're going to pass on Weight Watchers. CPRX, okay, very recent Value Investors Club write-up, just 2 months ago. Again, net cash. The numbers are wonky for ROIC, so we're gonna keep an eye on that. But again, very small, under $500 million market cap. So again, like to see that, and 12% insider ownership. Supin, SUPN, my fourth buy for Magic Formula this round. One guru owns it. It's a little lower than I'd like for insider ownership, but I got to buy something. I've got to buy 5 companies, so we've got to make some compromises. And in this case, I'm compromising a little bit on the insider ownership number of 8%. What else? Net cash, love to see that. Very low. Acquirers multiple, the lowest of the 13 finalists on our list here. So that's compelling. And 10-year ROIC looks good, 16%. That's nothing to sneeze at. WSTG, I already own. Last one we're going to look at here, ASO. Too high on the debt. Okay, not comfortable with that level of debt. So that takes us down to 8% with insider ownership. So we only have 4 here, okay? We have 4 that kind of pass the initial filters. So we need one more. So the way I selected the one more is, the least evil in terms of, I'm going to refresh this, guys, sorry about that. The least evil in terms of how much debt it has, all right? So that went to Dish, okay? Dish, 4.1 times debt to operating income. It's not as bad as 5.2 or 5.4. And I really don't want to sacrifice too much on the insider ownership numbers. I don't want to dip down into 5% and less. So, it's pretty obvious which one. We're going to go with Dish, okay? So we're going to bold that. We're going to make it blue. And here we go. We have our 5 buys for this round of Magic Formula stocks. So there it is, guys. If you have any comments or feedback on the filters that I'm using here, let me know down in the comments. But before we end the video, I want to look at how have the last 3 rounds of buying with Magic Formula stocks worked out? What is the performance? Obviously, there hasn't been a whole lot of time to look at the performance, so don't put too much weight on these numbers. I mean, I don't care too much about how these are performing in less than a year. I'm really looking at 2-year, 3-year, 5-year numbers here. But it's interesting, and it gives me confidence if it seems like we're on the right track. And it does seem like we're on the right track. So I buy in 5 stock batches every 3 months. So you can see at the end of June, I bought these 5. At the beginning of October, I missed it by a day. I bought this batch of 5, and then right at the end of last year, December 31st, I bought this batch. So what have they done? Okay, what have they done in the last 9, 6, and 3 months? So for the 9-month batch, the end of June, you can see here 71%. That's the cumulative. Okay, the best one returned 139%. Okay, that's a 2.4x. Now, I'm doing $100 in each one. This is in my daughter's investment account. So, it doesn't seem like much, but $500 every 3 months, that's $2,000 a year. And that's just part of her portfolio that I've set up for her. The other part, I'm doing higher conviction bets like Seritage Growth Properties and Micron, and some of the things that I'm investing in my primary portfolio. So it's a small piece of her portfolio, but I think it's going to be significant over time. So you've got 71% from the batch 9 months ago. So that's fantastic, right? 2 of these have more than doubled in the last 9 months. A couple of them are around 50%, which is great. One of them is 15%. Okay, so very happy with that round 9 months ago. This batch 6 months ago, 21%. Okay, that's great for 6 months. That's fantastic. I'm very happy with that. You can see there's a bunch right around 30%. Okay, and that's awesome. 30%, like, if I could do 30% in a year, or even 30% in 2 or 3 years, that is very good. 35% in 3 years, no, 35% a year is a double every 2 years. Okay, so these are fantastic numbers. I'm very happy with them. There's one stock out of this batch of 5 that dropped. Okay, that was Coherus Biosciences. I believe that's what CHRS is. So it went down 20%, okay? But overall, I'm very happy with this batch, up 21% in 6 months. Now, the batch 3 months ago, you've got AMCX. This thing has been a wild ride. It's up 49% as of today. But I think it's been up a lot more than that just recently. I think it was one that got hit by some of these big funds that are getting margin calls. I think had to sell off a bunch of AMCX. So, and again, there's only one in here that's down over the last 3 months. So that's great. If I only have one down every round, I mean, that's phenomenal. I'd take that all day. One basically even, Ruger, kind of a bit of a laggard there. But again, it's 3 months. It's a drop in the bucket. I'm really not at all concerned what these stocks are doing in 3 or even 6 or even 9 month periods. This is just kind of interesting to take a look at. So we've got a cumulative 16% on the batch from 3 months ago. Awesome. Very pleased with these numbers so far. Of course, the whole market has done very well over these time periods. So what will be very interesting is how these things perform, like I said, over 2, 3, 5 years. That's really what we're going for here. Buying cheap, buying good, waiting for a reversion to the mean with these companies, hopefully getting some 10 baggers or even 100 baggers in here, and holding those for long enough to actually experience those returns. So that's really what we're trying to do here, guys. Just wanted to give you a snapshot of the last 9 months with the magic formula and give you my 5 selections for this magic formula buying round. So again, guys, I'm an open book. Let me know if you have any questions down in the comments. Yeah, that's all I got for today. Hope you enjoyed this. I will see you all in 3 months for my next batch of magic formula stocks. All right, guys, take care.